Alright guys, so it's Ambassador Chooks Paul right here. I'm going to be your tutor for today. So this class is specially meant for you to understand market structure and change of character. When we talk of market structure is the most important thing you need to understand. Hence, it has to do with forex markets. You need to understand market structure for you to be able to attend to any level of profitability you are looking out for. Market structure is what gives you the structure of the market, is what gives you sight into the market, is what gives you sight into the market. Most people tend to downgrade the importance of market structure, but I wish everybody will master and understand market structure. Then your journey has been 70% cut in learning technical analysis. Market structure is key. I always use this as an example. If you see a skeleton of a human, you will know that it's a skeleton of a human. Why? Because it has the structure of a human. True of us. The same thing if you see a skeleton of a wild animal or a bush animal, right? You also be able to identify why, because it has the structure of what? Of an animal. You can't see the skeleton of a goat and you say, this skeleton of a goat looks like a human skeleton. It can never look like the same, right? So we need to understand that structure is what gives us sight to understand what market is doing and where market is heading to and where it's coming from. If you don't understand structure, you can never become profitable in the market and you won't even know what you are doing, rather than you will be gambling. So we need to understand that market moves in two ways. Number one is either is pushing to the upside. I always emphasize this because this is where your profitability is. This is where what you need to understand. This is what separates advanced traders from beginner traders, because advanced traders understand that what they are looking for is structure, not whatever thing else you are looking for. And I bet you, if you can calm down, take away the mindset of wanting to make money today, tomorrow, and learn structure, you'll be 80% ahead of others. This is one thing that helped me so much when I was starting out, right? It was understanding market structure. So from the day I understood market structure, it was just like my eyes opened, right? It was just like my eye opened. I began to see things that I am not seeing. You understand? So we need to understand that market moves is either trending up or trending down, or is ranging, which for me, I don't trade when market is ranging because my strategy does not allow me to trade when market is ranging. So we are not focusing on ranging market. We focus on uptrend and downtrend, and we need to understand this, that the fact that I marked this doesn't mean that market moves in this figure. For instance, let's say that is what is called top-down analysis, right? But we'll discuss that on another video. On this particular video, we are focusing on structure, so please follow me. So when price is trending to the upside, we are expecting price to do what? To break structures, BOS, break structures. And one of the rules is that hence price is breaking structure to the upside, we don't expect price to come and take out this low. For it to confirm that yes, it's still in an uptrend, we don't expect price to come and take out this low. Price can come as low as up to this level, but it's not expected to take out the low, right? So we are expecting price to stop here and then continue what? Back to the upside, right? So these lows, no matter what price is doing, these lows are not expected to go out. Hence, we are still in an uptrend. These lows are not expected to go out, to confirm that we are still in an uptrend. right? But we are expected to be seeing all these highs going out, giving us breakout structure. BOS means breakout structure, breakout structure, breakout, breakout structure, and here we still have breakout structure. So this is what we're expected to be seeing: price breaking structures to the upside, right? Not tampering the lows that cause that breakout structure. Please understand this. If market is in an uptrend, right, you have identified your trend. What you want to look out for is the current breakout structure. Whatever price has done in past is not really necessary at that point. Your most interest, where you are looking out for to look out for trade, is at this spot where price broke structure, which is called your trading range. So your trading range, you mark it from here, you mark from here to here. Why will you mark this trading range? Please don't be confused. Just follow me very gradually, don't be confused. Why will you mark this as your trading range? Because price has broken structure. This is the last breakout structure we have here, right? And this is the low that caused this breakout structure, and this is the high. The high means the highest place price got to before it started this retracement. Right? So this is the low and this is the high. Anything price is doing inside here should not move you. Normally, price will not just drop like this. Usually, you will see something like this. If you go to the chart, you will see price drop straight and then move up. You will see things like this. This is what you are going to be seeing. Then even when price is going back up, this is what you are going to be seeing. Does it mean that price have changed character? Does it mean that price is now selling? No, it's still in an uptrend. But looking at it from the chart, this is how it's going to look. It's never going to be straight this way. So your interest is on this high and this low. Your interest is not on these things. You can't come and be marking these things breakout structure, breakout structure, breakout structure. You are not interested in these things. You are not in, except you're a scalper. If you're a scalper, then you are interested in it. But if you're not a scalper, you're not interested in these little moves. Your interest is on this major move, which is uptrend. This is where your interest is, right? This is where your interest is. So no matter all these small breakup structures selling, some of you will not think that, okay, this is now downtrend. You now forget that the major trend of the market is uptrend. You now say this is now downtrend. Let's look out for opportunity to sell. Before you know, the price hit your SL and still go in your direction. Price hit your SL and you say, you entered immediately enterprise took you out. That's because you entered from a wrong particular place, right? So please pay attention. So you are not interested in all this. Your interest is on this low and this high. And remember, this low and this high, you are going to be marking it from your daily time frame or your 4 hours time frame if you're a day trader. But if you're a swing trader, you can mark it from monthly time frame and weekly time frame, right? So as a day trader, your interest is this high, this low, and this high. So what will you be looking for? You are expecting price not to take out this low to confirm that yes, we are still in an uptrend. Price is not expected to take out this low, but price is expected to come even as low as here, but it's not expected to take it out. So what you are now anticipating is when price now comes to this, close to this low, let's say you have a demand zone here. I believe you must know what demand zone is by now. If you don't know what demand zone is, then you can check the other video about demand zone. So price, once you see price come to your demand zone, that's where you now want to see price react. That's where this small chart now will not make sense for you. That's where your interest will not be on this small chart, because you want to look for a buy on this zone. So that's where you can now scale down to 1 hour time frame or 15 minutes time frame. So because this market is trending downwards, 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 right? This is the last break of structure to the downside. And remember, when price is breaking structure to the downside, we are not expecting price to take out the highs. All these highs are expected to be secured. All these highs, we didn't expect market to take them out. Whenever price take any of these highs out, we now know that something else is about to happen. And then we can see it here that price actually took out this high, but it was not supposed to. So for price to take out this high, it shows that price has come to your demand zone. So this is your demand zone. Price has come to it. And we can see that price have broken the high that brought the last sell to this zone. And now you see price have shifted to the upside. What do you look out for? On your 15 minutes time frame, you now look out for your demand zone here. You look out for your demand zone. Mark that your demand zone. Put your long in position. Just following structure alone. Following structure alone. You don't need any other strategy. Put your entry. Target the high. Remember, this high and this low is your trading range. So for you to be on a safer side on this trade, your stop loss has to be on this low and your take profit has to be on this high. Why is your stop loss going to be here, not here? Your stop loss is going to be here because for you to be more safer and sure that this trade is not going to hit you out. If peradventure it hits you out, that means it's now going to be selling, no longer buy. Your stop loss should be low, right? Or your stop loss should be here at this low, because this is the low that caused this change of character to the upside. So we are not expecting price to come and take it out again. You understand? But sometimes there can be manipulation. Price can still come, take it out and still buy. That's why this low is the most safer place to put your stop loss. But sometimes you can put here, sometimes depends on what you are expecting. Like for here now, you see that you have 4.4 risk to the world, but if you are putting it here, you have 2 or 2.5 risk to the world, right? 2.5 risk to the world, right? Which means if you are risking $100, you're going to be making $250. You understand? So if you are okay with putting it here, is fine, right? Is very fine. If you are okay with putting it down, is also fine. But the main important thing is follow the market structure. This is market structure for you. This is market structure for you. There is nothing to complicate. This is how market structure works. I don't know if you guys are following. So this is what differentiates top traders with upcoming traders and with beginner traders and with people who have been losing, because they put time to understand structure. They put time to understand structure. So let's go to the chart. Let me show you something. So this is Euro USD, right? This is Euro USD. If we look, this is daily time frame. If we look at this chart, we can see that this thing is uptrend. We don't need a prophet to tell us that this market is what? In an uptrend. And hence is in an uptrend. What are we looking at for? See, because it's in an uptrend, you don't need to come and start from here. Mark structure, mark structure, mark. You can do that, but your interest is not all this place, because this is a daily time frame. Are you getting it? Your interest is what is market doing currently? Where is the current high and the current low? And if we check here, okay, let's just start from the beginning so that you don't get confused. We have this break of structure here, BOS. Please just follow me. This class is going to change your way of trading. We have another break of structure here, BOS. We have another break of structure here, BOS. And remember, before you mark a break of structure, make sure that it broke structure with a full candle, not weak. Not weak. Weak can be a sweep of liquidity, but let it break with full body candle, another break of structure. So where is our interest? We are no longer interested in all this All this break of structure we mark here, we are not interested in it again. We just use it to know where market is going. Look at where our interest is. Our interest is on this. Our interest is on this low that caused this low that caused this high. That's where our interest is. So this is where our trading. Remember, I mentioned trading range. Exactly. This is where our trading range comes in. So we have our low here, and then we have our high above here. So this is our trading range. This is our trading range. What are we now expecting? So based on our strategy, which is smart money concept, we are looking out for a demand zone where we'll be expecting price to come and tap in. And where is that demand zone? We have this order block here. And you can see the last time price came, it was very little. It was remaining very little for price to tap it. But price did not tap it. And price leaving this now, for me, this is a liquidity that price will come and take, because there are already people that enter this trade buying from here, thinking it's going to continue. If those people, if their stop loss is below, they are safe. But if their stop loss is here, the price are pushed, they now break even, or they put their stop loss here, they are not safe. Price is going to hit them out. Are you getting it? Here we have this liquidity, right? We have this our liquidity here, and then we have this order block. Are you getting it? And you can see price is already coming. What do we want to see? Whenever you see what I was saying, that price can never just drop straight to this zone. You can see how price is forming a downtrend move. Just watch it. You can see how it's forming a downtrend move. And here it drops here, pull back here. What are we anticipating again? A drop inside this zone. Once we get a drop inside this zone, what do we want to see? We want to see price now start doing like this. It can never just move straight. We want to see it start moving like, once it break under structure, what do you want to see? We want to see it start doing like this again, start retracing again. This is how market moves. And for you to see this very more clearly, for you to see it more clearly, I mean this range, let me change this to line so that it can be more clear. All right, so you see what I was explaining here. This is what I was explaining here, and you can see that their highs are very well maintained. Let me mark it out as I marked it out while expressing my this thing. You can see here, this was maintained. Price did not remove it. Look at this one. Price did not remove it. Look at this. This is the high that caused the slow, right? So this is the high. This high caused the slow because this is the last break of structure here. POS. So this is the last break of structure here. You can see how price maintained these highs. Price never tampered with them, right? Price never tampered with them. So this is how structure puts you ahead of others in the trading space. When you understand the concept of structure, it puts you ahead of others in the trading space. So if you want to trade this, remember our major trend is uptrend, but right now we are having a downward move. If you want to trade this particular sell, it's possible. Why is it possible? Because you understand the concept of structure. So you know that our major trend is uptrend, so you are waiting for price at this level to buy, to continue buying, right? At the same time, because you understand structure and you can see that price is retracing, and this retracement is sales. This retracement is sales. What do? You can then now, this is daily time frame, you can now scale down to your 4 hours time frame. So remember, our trend is what? Uptrend. Also remember that we are anticipating, let me delete this. So this is the trend we are following. This is the trend we are following. Let me quickly delete this. This is the trend. You can see it. You can see it, right? So we have this high, this low, this high, this low, this high, this low, this high, and this low here, right? So somebody will now ask, why did you count this one? Let me explain. This high is not valid. This low is not valid. Why did I say so? What and where you need to pay attention is the low and the high that cause a break of structure. Pay attention. If you see this high here cause this break of structure, removing this low, right? No matter, even this retracement here doesn't count. It's still this high that caused it. This high caused this break of structure. Pay attention. This high here caused this break of structure. Remember, price will not just drop straight. It will always do push, pull back, push, pull back, push, pull back, push, pull back until what? It breaks structure. Are you following? Then the same thing, this low created this high, and then what did we see? Price dropped straight. So as price will not do just drop straight, it will always do push, pull back, push, pull back, push, pull back, push, pull back until it takes out that low. So the same thing you can see, we started having push up, push down, push up, push down, push up, push down, push up. And right now, what are we seeing? This is 4 hours time frame. Remember, this is 4 hour time frame. Remember, our major trend is uptrend, which we are waiting for price at this one. But right now, we have a very good sell following this correctional move, because this is a correctional move. What makes it a correctional move is a correctional sell to continue the buy. So if we come down to 1 hour time frame, let's go to 1 hour time frame. This will make you love trading very well. This is 1 hour time frame. For instance, some of us will say, start saying break of structure, break of structure, break of structure, break of structure, and now start following this. Remember, the most important thing you are looking out for is the higher time frame. You are following what the higher time frame is doing. Remember that. So you are following what the higher time frame is doing. Not this noise. Except you're a scalper. You understand? So following the trend of this market. So let's say you are you are scalping these buys. Let's say you are scalping these buys, right? At this point, you shouldn't be scalping the buy again. Why? Let's see. We have this high that caused this low. Remember, right? You remember this high, right? Exactly. That caused this low. So if we see here, we can see that we have a supply zone here. This is 1 hour supply zone. We have a very good supply zone there. Very beautiful supply zone. Right? Price tapped on it. Are you seeing that? Price tapped on it. Where do you think this price is heading to? It's very simple. It's coming to take out this low to tap on our demand zone, and then we now look out for what? For buys. So we can see this is, if we check last 4 hours candle that closed, you can see that the last 4 hours candle that closed very strong engulfing. You see engulfing sell. You can see engulfing, bearish engulfing candle, right? So what are we anticipating? Very simple. What we are anticipating is now this candle, this one that is pushing, should also close bearish. Then we want to see price probably retrace here, right, to join the sell. Why do we anticipate it to retrace here? Because we have this other block. Let me take this out. We have this blue candle here, which is our other block, and then we have an imbalance that price have created between this blue candle and this candle that is pushing down. So that's an imbalance. That's an imbalance, or FVG, whatever you call it. So this is our imbalance. You can see the imbalance, right? So you may want to take your trade from this imbalance, sell from this imbalance, putting your stop loss above this high, above this high here, and then targeting this low, because that's where price is coming. That's the liquidity that price is coming to take out. So what do you want to see? You want price to, after the closure of this candle should close bearish. Then you want to see another candle that will come and tap here, and then you can probably go to lower time frame and then take a sell, or you can execute instantly using um any time frame, right? Once price comes back there, you know that okay, price has returned back there, and you do what? You execute your trade. And once you do this, once you understand this, right, this will give you peace of mind. I'm telling you the sincere truth from my little experience, from my very, very little experience. Once you understand this, this will give you this 1 hour candle. Let it close. Let this 1 hour candle close below this. Let this 1 hour candle close below this, giving us a 1 hour change of market trend, right? Let it close below this. So if we get this candle close below here, what do you want to wait? You wait for price to retrace anywhere here, and then you enter for yourself. And once you enter, you already know that this is a trend line liquidity. We can see it, right? This is our trend line liquidity, very beautiful. And for those that trade trend line, right, it's still the same thing. You can see it's aligned. For trend line traders, want to see a breakout of the trend line and a retest. It's the same thing. Whether you're trading SMC, you are trading, we are seeing the same thing. The most important thing we need to focus on is market structure. I hope this video change and transforms your trading for good. Sincerely, I'm teaching this from the depth of my heart. I hope this transforms your trading. So this year, whether you're a trendline trader, is the same thing. Whether you are you trade SMC, whatever you trade, hence you are following the structure. We are all seeing the same thing. So you can see trendline traders want to see a breakout of the trendline, a retest, and then while you want to see a change of character, a retest to fill your imbalance, and then a drop. So it just shows that we are all seeing the same thing. The only time we start seeing different things is when we are not following the market structure. That's why I'm making emphasis. Try and learn, understand the concept of market structure. Understand the concept of market structure is going to change the game for you. It's going to change everything for you. So that is it, guys, for this video. This is where I'm going to be stopping for this beautiful video. Do well to save the video, download it, watch it again and again and again and again until you understand this very little concept. This thing is going to increase your trading by 100%. It's going to increase your trading by 100% if you understand the concept of market structure. Thank you guys for watching. God bless you.